Well, hello. Thank you all for coming, and everybody else also. Thank you for coming to listen to us. Where Crowdfunding Hub is a member of the FINE consortium. That's why I'm hosting this this panel discussion, and we want to discuss what abilities and tools investors need because we have such a huge development in AI. I mean, it was already discussed in the panel discussion just now, but now we would like to focus on the investor side. What, if you are an investor, what do you need, and how should you look at things differently, and what should you pick up? I think it would be great if our panel members would introduce themselves shortly first. So maybe you can pick up, and then we can see who we are actually speaking to today. Lisa, you want to start?
So my name is Lisa. I'm a director at Plug and Play Tech Center. So Plug and Play is we're the most active early stage investor globally. We're also, just according to the latest Sifted ranking, we're the most successful in terms of deals European investor as well. And we're also the biggest global innovation platform, because on the one hand we are investors, we invest in startups, and on the other hand we work with 550 corporations around the globe across 65 locations globally, and we help them with everything when it comes to startup scouting, investment, and also innovations in general.
Wow.
Thank you so much for having me, and I pass the mic, I guess, to Florian.
Hi, thanks a lot for having me today. I'm one of the two co-founders of Astoria VC. At Astoria VC, we invest in tech related to insurance, so let's call it InsurTech. We invest across Europe, specifically on Western Europe, but we start to have investment in the Nordics and Eastern Europe as well, because there is a lot of nice technologies over there. And we invest at seed stage, so basically when the product is there, usually we go after the first customers alongside entrepreneurs.
Hello, my name is Linus Lozny. I'm a co-founder and CEO of Shiparize. So we are a startup active in asset-backed financing based on inventory and trade finance assets, receivable purchase orders from real tangible businesses. We have been selected in 2024 as a Techstars company, so we're part of the portfolio of Techstars that is now gathering many fintech companies in Europe. And little fact about the 2025 class of Techstars is that 10 out of 10 companies are AI companies in fintech.
Okay, thank you very much. I know we have a little less time than we originally have, so I'm going to have to choose a little bit. What was already discussed a little bit in the panel discussion before was the AI disruption of fintech. And I was wondering what you think this means for the new skills that investors need. What tools and what skills do they actually need now the AI is here? Lisa, could you?
Yeah, sure, with pleasure. So I think, and what we're seeing, I mean, at Plug and Play, obviously, that as Lionel said, that there are a lot of investments in fintech, especially, like they are all. There is this shift where I think a few years back, a lot of fintech companies were saying, okay, we're a fintech startup with some AI use cases, and now there is a shift. So that, like the majority of the startups, they understood the hype and the marketing kind of the word AI, and they now present themselves as AI startups with fintech use cases. So it has changed. And I think for investors, of course, that changes the perception in the sense that they not only need to look at the balance sheet right now and to analyze the financial situation of the company and to see, well, their profitability in the long run, but they also need to understand a little bit more the technology behind it. So we work, for example, in Plug and Play, we work with specific data scientists and people who understand the tech. So it's not only people who traditionally specialize in fintech and understanding, you know, for example, banking or different financial products. It's also the people who understand the tech, the regulation, the compliance, because also obviously with AI comes a lot of responsibility. The data sets need to be used in a compliant and ethical way as well. And so all the investors need to, before taking the decision to invest or not, they need to understand all those matters like regulation, compliance, and everything that comes just, you know, on top of reading the balance sheet correctly.
Yeah, maybe to add on this perspective, and specifically to the insurance industry, we see similar pattern. A lot of startups claiming that they do AI in insurance. That's a quote. And I think that in an investor perspective, if we see a third of all insurtech deal announced across Europe related to AI first, so that's slightly below the ratio you shared on tech startups in fintech, but a third of all startup claim we do AI in insurance, I think that in our perspective, the first challenge is to have a very nice understanding of the value chain. I think that there are so many players on the ground claiming that they leverage AI for X or Y. As an investor, if you don't understand, especially the insurance value chain, then that's a challenge. How you will, or where would you add value thanks to that technology? Because on the other hand, you need to keep in mind that insurance companies or potential customers of this startup are snowed under these kind of players, because on their side as well, every day they receive, and probably in the room, if you're working for a corporate, probably every week you receive tons of emails of startups saying, look, I can do AI for this or for that. So first, it's about the value chain and how, let's say, the founders understand the value chain. Then it's about technology, I agree. And here it's related to the background of the founders themselves. So on the investor side, you need to have a view or to leverage your network of tech people to make sure that the founders do have an edge in terms of technology. And the third point, and I think that we'll come back to that topic later on, is how do you access data? Because I think this is a key challenge for startup in that space. So even the investor need to have a clue on how the startup will leverage specific data or will leverage value-added data. So these are the three topics I would focus on.
Yeah, because for Lionel, for you, I was going to add exactly that subject. What is the effect of the different data access that different investors have?
Yeah, I hoped I wouldn't get that question, but it fell on me. Data is really the sensitive topic when you talk about AI, and I think most companies, and especially fintech, prefer to deflect on process or like efficiency gains that they get with AI. So when it comes to data, I think this is probably the most sensitive topic, as today it consumes a lot of data, and I have to say I really fear that even the early stage adopters are actually giving up their data to models that they don't fully comprehend and see how it will be used by potentially their competitors, their clients, or their investors in the future. So I think this is really a big topic.
Yeah. Okay. If you look at the investors in fintech up to now, in the FIND project, we found that there's a great difference in skills, which you've already now described. And there are some investors who collaborate, like was just mentioned in the other panel as well. They are competitors, but also collaborators. And I was wondering what you think is a good way for new investors or new VCs or other investors to become part of the collaborative networks that exist for investing in fintech, because they seem to drive the major investments at the moment.
So I think, obviously, I think it's crucial to be part of the network. So on our side, with Unplug and Play, we partner with 350 different VCs. So even a company that has been there out on the market for, I think, more than 20 years now, it is crucial for us to be surrounded by other partners, other VCs, because the information that we give, we always, of course, not all the information, but we share different deal flows and we get access to different type of information, and we ask for opinions before we do our investment ourselves. We also get information, from our corporate partners as well, and we evaluate the startup and the technology also based on the feedback that our corporate partners are giving us, because they can as Florian, to refer to what Florian mentioned before, it's because they sometimes, when it comes to fintech, they would be the end customers of the product that the startups are building. So even if we know they're not working yet, we can go to some more corporate clients and see and ask them, okay, what do you think about this specific solution? Would it be useful for your company in the future? So I think it's very crucial to build, if you're a young investor or you're just building up your career, it's very crucial to have the network of people who you can surround yourself with and to ask advice and to get access to different deals, different types of data. It's crucial. You cannot do everything alone, for sure.
Yeah, and at the end, there are more startups on the ground than investors available to invest. So it's especially at seed stage. That's not true for more mature startup. It's rather the opposite, by the way. But at seed stage, there are plenty of investors. Hence, we are co-investing. So, for instance, with a plug and play. And I think it's a matter again of value added, because if I take my perspective, I think that as a fund we have a key edge, I hope, in front of entrepreneurs. When working together, it could be with non-verticalized fund. So this could make sense to scale the sales team, for instance, be more visible in front of the market in terms of marketing, developing the product, and so on. But if we are considering co-investing with fintech or other insurtech fund, this could happen. I believe that we should bring something different to the startup. And I have in mind one example that a startup launched in Spain. We had a look at that investment case a few years ago, and we passed on it because we didn't see any room for scale in Europe. Another fund, which is dedicated to fintech more broadly, invested in that startup and scaled the startup not in Europe but in Latin America, meaning that it's not only about the project itself, it's about how there is a match between the investor and the entrepreneur's roadmap and what the investor can bring to the table. Long story short, if there are complementary fintech investor or insurtech investor around the same table, yes, co-investment could make sense. So I think that in terms of collaboration between fintech funds, yes, we are competing together, but once again, there are more startups on the ground than investor available. So it's a matter of what you could add to the startup itself, and then complementarity could happen.
Yeah, like just to add the point of view of a startup, and I feel now the market is the investment market for early stage companies more market driven rather than tech driven, and let me explain that. Is basically now the proof from the market is much more important than it used to be, where you had business angels that were very tech-driven, very knowledgeable in the market, and that would pull the investors together. I think now it's more like early-stage investment. It's more getting in the numbers, large business angel syndicates who just spraying and praying. And I think to a certain extent that goes a bit against this knowledge of and understanding of the technology that you mentioned. So I think there is something there that's definitely worth digging in.
So, and if I'm a new investor and I'm not connected to Plug and Play yet or to Florian, how would I become part of these networks? What do you think, Lionel?
First, now I think business angels, at least early stage investors, could be small fund. They need to have quite some money. So I think this is really a question of having the right envelope to invest. You cannot enter the investment game with very little money. It is very, very difficult. So I would say it's a question of size. It's a question of having indeed the right, being part of the right networks and really engage with those who are actually pulling the market and putting investment out there. I mean, it's important to be with those who actually do investment, and a lot of them.
Okay, so it's trust here as well. Trust was mentioned in the other panel, but trust between investors and knowing each other as well.
Yeah, trust and value added, because I don't think it's only a matter of the size of the ticket that you can put. And the counter example is the next fundraising round we will announce soon. Actually, the founders agreed to dilute themselves more to leave room for us. and it's not to be nice with us. They probably don't care, though they are nice. It's because they believe that our insurance focus and our insurance network in France and Europe could add value and accelerate the development of the company. So I agree that if you have more money, it's easiest to enter a round. But if you have a limited fund or if you have small money, then you need to have smart money. And I believe we are one example of this kind of vehicle. We are not the largest on the market. Hence, we are very dedicated to insurance and risks because that's where founder could get value anyway from what we could bring on the table.
All right.
Maybe to add to the point that Florian has just mentioned, I think that the good startups, unfortunately for us investors, but we investors are now in the situation when the good startups are actually selecting between. So I think before it was that they were selecting, okay, where do I go to, who do I reach out to? Now they're really the best startups. They're actually selecting the investors because they have a pipeline of investors coming to them, and they're actually selecting based on the value that they see that this specific investor can provide at this specific of their stage of development and their this period of time. Because for different also periods and different rounds, they can have different goals. And for example, if they want to go internationally or to scale up with some corporate, this is where, for example, Plug and Play adds value because we have a network, international network. But if they want to be, for example, specifically developing just in France, maybe they will choose and go for a specific local investor that can help them just in France. So it's a very valid point, I think. Yeah.
So it's turned around a little bit. Okay, last question I had, because I think we're running out of time. Yeah. The last question I really want to ask is one of the focuses of the FIND project was women and minority founders and investors. We know that their numbers are quite low in fintech. I was really glad to hear about your fund. I think that's a great impulse, hopefully. And in the FIND Academy, which is accessible for free for everybody, by the way, but in the modules, we have also specifically geared towards these groups with the knowledge that is provided there. But so they are not, they don't have as large a role as we would like them to have. So I was wondering, how do you feel we could, or how do you feel it will involve, and how could we support it? Or how will this go? Because
and if you can keep it as short as possible, because there is a coffee break that the people will want.
And everybody wants coffee. Okay.
Go ahead.
No, maybe one point and one data point. Actually, a few years ago, we had a look at all the fintech startups in Europe. Only 8% were with a woman founder. So I think that we should start working on this, having more women launching their company. First, because they tend to build very nice and sometimes better companies than men. But if we don't have a higher pool of women-led company, it's really tough to invest in such startup. For instance, at Astoria VC, 20% of our portfolio is women-led, which is obviously far from half, but is way above this 8% across. So I think this is the point. And I guess that we should have more women showing that they have succeeded. I think that role model is key, and women should believe that they could build a better company than men, actually.
Maybe, sorry to take the
I think it's better when men talk about women founders. It's so much better.
Yeah, maybe a risk as well is in terms of the actual function they have in the organization. I checked that actually women are overrepresented in customer service and compliance and fraud detection, which is exactly what is being disrupted now by AI. So if you want to get more women to get on top of the game, we need to provide them with opportunities to train, to get better at AI, and actually continue to thrive in the departments they already work in. I think that would be very important.
Yeah, because there is European research which clearly shows that if we have more women and more minorities as founders, that the added value overall increases. I mean, it's so that's clear. Did you have anything to add, Lisa?
Yeah, so I wanted to add with some numbers as well. There was a study from Harvard Business Review in 2023, and I think by this study they found out that the companies that are led by women in general attract 3% of the whole VC kind of pool of money globally. So this is nothing, and it's not only in fintech. And in fintech, we know that among all the startups out there, the women founders, it would be like not more than 5% normally. For example, on my side, I also run an acceleration program with BNP Paribas, a fintech one, and we have throughout the last 7 years, we have only 5% of startups that are founded or led by women who participate. And I guess it goes to the point that Florian has mentioned. So we need to start by, inviting women to be more, to starting the companies and to be more proactive and more, more probably brave to kind of try hard and succeed. Because I think also, like in terms of performance, it has been proven that the companies with diverse background, and especially with having both men and women, they have better performance. So this is a matter of fact. It's just about encouraging, I think, more women and also having those role models that can, inspire
so it's
others.
good to know that we need to be optimistic. 8% is like hell. Yeah, 8%. Yeah. But by the way, I have a friend that I wanted to invite her here. She couldn't come. Adina Grigoriu, maybe some of you knows from Active Asset Management, the company which is exhibiting here. So she is kind of the fintech founder that I would like to emulate. So look after her. Anyway, thank you very much for your kind panel and very interesting panel. Thank you. Very, very good.